Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So in euro currency, as you can see, we've got the pullback that we have discussed recently. From the technical point of view, this is absolutely normal reaction. Just because, as we said yesterday, market has formed the first bullish reversal swing here after the previous swing down. And usually, in the most cases, after the reversal swing, market shows deep retracement. This is absolutely normal, just because this is the way how market reacts on the previous momentum. Actually, existing previous momentum is pushing price lower, trying to reestablish this downward action, continue this downward action, and that leads to the deep retracement. So this is some kind of the moment of the fading of the previous momentum. And if market's strong enough, it just holds this deep retracement and break the direction. If it's not strong enough, so usually any patterns that are forming here are failing, and market just keep going lower. So that's what we have currently. On a daily chart, it is impossible to say here what is going on. It's just because we have the bullish trend. We have a retracement with this trend. And as we said, that is the point which is as bulls, as bears have to keep an eye on. Because for the bulls, this is opportunity to take the long position. This is, as I call it, culmination point. It's just because at this point, you have the minimum risk and maximum potential risk-reward ratio. Or better to say, reward to risk ratio. So it doesn't guarantee you success, but it guarantees you minimal loss that you could take, minimal risk that you could take if you take position right there. So for the bears, it's also interesting because we're coming to the payrolls, and if they appear to be stronger, because JOLT is a JOLT, ADP is ADP, but everybody is looking at the payrolls. And if it will be stronger, it easily could happen that market will collapse. Additional bearish factor that already mentioned is untouched, uncompleted OP target right there. Market very rare abandons important targets. Sometimes it happens, but usually it is accompanied with the big shifts in some sentiment, in the fundamental background, something of that sort. So we do not have any break on the fundamental background by far. And that is additional points in favor of the bears. On the 4-hour time frame chart, the same story about uncompleted target, that we have the XOP. Another potentially bearish point is that, take a look, it's a bit stronger downward action. So for the hand and shoulders, it's not very good. It shows some thrusting action, and the bottom of this is deeper than the potential shoulder right there, especially because you could see that you have the slope neckline to the upside. If it would be to the downside, it is normal, and the shoulder might be lower, but you have some kind of the divergence between the slope of the neckline and slope of the shoulders. It doesn't mean that it's some 100% bearish factor that promises failure of the hand shoulders, but still, this is some moment. So actually, we stand in the point when the bulls have to make the decision. If you would like to take the part of this journey and you are not really scared of the common perils and the possible volatility around it, you could think about taking the position here. Because you will need to place stop right below these lows. You do not need to hide stop below the head or something, because from the technical point of view, if market indeed bullish and intends to start upward action from this pattern, it will not show any downward action. It's just because the level where the reversal should happen is already completed, it's already touched. So, and for the market, it either will start upward action, or it just failed the hand shoulders and market will start dropping, erasing hand shoulders, moving to the targets that we have. It will not be some kind of deeper retracement and then reversal, something of that sort. This is actually the moment of truth. And for the bulls, this is the point where you could try and take a position. As I said, the perfect combination of the risk and reward, potential risk and reward. Alternatively, you have some other options. For example, you could wait for the payrolls. When it will be released, then you could, in the calm atmosphere, in the calm situation, make the decision. Maybe it makes sense to postpone the decision on the next week, starting on a Monday. Do not take the position before the weekend. This for more conservative traders. Additionally, for example, you could wait when the market will start the upward direction and then try and take a position on some minor pullback. This is also possible. So, and this choice is up to you. But in general, where are the points where hand shoulders should start or just fail? Some kind of the pain or gain situation. What the patterns you could consider? We do not have any harmonic patterns here, but for example, you could take a look at double ripple, for example. So what we have, thrusting down, close above, no close below, so the market could form the close below the double ripple, and close above again. It will be signal for possible taking the position. So market creates the new bottom, so close above, close below, and forming the new lows. It's now returned back up. This is, by the way, not bad sign that market just grabbed the stops below this. Sorry guys, have to make the pause, and you can see in this pause market already starting some upward action. So all in all, what I have said is just actually this is the moment where you have to make the decision if you'd like to buy. So depending on your risk aversion, so you could wait for payrolls or postpone for Monday. So maybe make the decision when the market already will start upward action. The bears in turn have to consider possible failure of the market here and start dropping. So if market will drop below this area, below these lows, it will be, well, really big step in favor of failure of the hand and shoulders and downward action. So that's the moments that we have to keep an eye on today.